Benton.
Whitten, happy Friday.
Happy Friday to you, mate.
Coming to you on time at 5:30 Vic time, 4:30 Queensland time.
Yeah, perfectly on time. Well, maybe not, folks. Well, at least a few people are joining us, even though we're running late today. Alison, thanks for joining us. Sorry about the tardiness today. I had complete brain meltdown, thinking I was totally on time, thinking I was back at the old daylight savings time, and Andy reminded me that no, it's 4 o'clock Queensland and 5 o'clock in Victoria. But mate, maybe because I was hanging out down in your neck of the woods the last earlier this week. So
we must have thrown you off. A little trip down to Victoria for the mentoring.
Yeah, messed up my clock mojo. But welcome, team. Welcome, folks. Good to see you guys here. Chris, Alison, Jimmy, good to see you. Facebook user, whoever you are, great to have you here too. But mate, all the way from Melbourne, what are you drinking today? I was told I had to bring this home, the Pinot Noir from Levantine Hill, Yarra Valley.
Amazing. Yeah, that was the wine from mentoring on Monday night, wasn't it?
The wine from mentoring. So big shout out to our sponsors this week, Benson's Property Group and Levantine Hill. Very nice drop of wine. So absolutely lovely. Hey, good to see Di, Alison, another Alison there, as well as James. Happy Friday to you guys. Great to see you joining us. Mate, it's been a bit of a crazy week, actually. Hey, folks, one thing I did learn about traveling again this week, Andy, is how bloody inefficient it is. Hey, how much time do you waste? I'm just blown away. I'm actually sitting here at the end of the week going, wow, it was wonderful to see everyone. It was a little bit of fun to get out and about, but yeah, it was totally inefficient. It was terribly inefficient. For time wise, but anyway, there you go. But we are now doing something efficient now, Andy. We're on
on efficiently half an hour, somewhere around where we should have been. But,
yes,
mate, I concur. Just even just coming in, I busted almost 2 hours each way actually just coming into the live event, and the amount of work that you can get done, it's amazing. The gift that gets given sometimes by a forced event like what we've been through, and I say it to a lot of our clients, and especially in the business space, don't waste a good crisis. That's Churchill, not me, but I certainly mirror it from the perspective of learn the lessons and find out where the efficiencies are, and don't just mean revert just because that's the way that we always did it.
Yeah.
Think about, well, what have we gained from operating in this environment? And I was shocked, mate. I was at another event on Tuesday, Wednesday, and around professionals sort of in our fields, and a lot of the talk was sort of getting back into the office full time, getting everybody in there. And I understand the frustrations, but I also sort of thought, wow, there's some aggressive advantages that have come from this scenario, but there was just that tunnel vision, which is no, just got to go back to the way that it was, because that's always the way that it was.
Mate, you and I have chatted, hopefully, and let us know online, folks. Would you like to go back to the way it was? And it's there's no positive or negative about it. It's just like no right or wrong answer. Would you like to go back to the way it was before COVID? How you were operating either in your career or your business, or do you like it now? I certainly, for one, are voting for how we operate now, much more efficient. In all sorts of ways.
Jace is no days in the office. So in the chat, just put in there, if you reckon no days in the office, write a big donut, 0. If you think that it's sort of sitting where I don't mind it, 2 to 3, whack a 2 to 3. Or if you think it should go back to normal, whack 5 to 7. I'd be interested to see what everyone's thoughts are.
Benton, bloody, if you were, I'd never work 7 days in the office, mate. Like, it's 5 to 7. Note to self: don't apply for Andy's jobs. Just yeah, mate. A big week will be 7 days. An easy week will be 5.
Combine the both
for day. Yeah. Well, there you go. I mean, some of us like a bit of social. Deanne saying, "Hey, accommodation of both." Alison saying, "Hey, 2 to 3." Chris is like 0 in the office. I fly interstate for work. So there you go. Chris doesn't mind that. Hey, Chris is a bit of a Apple fan, Andy, and we're all frothing a little bit over the
the new releases. Yes, I saw them. Geez, how didn't that make my slide deck today?
Well, yeah, we don't want to end up just talking about Apple, but anyway, why don't we do this? Why don't we have a little crack on, folks, about good to see all of you guys in and on, even though Andy and myself were late. Well, I was late. Andy was actually on time, but not early. But for those who need a reminder, or if you're new, Andy and I started doing Wealth, Wine and Wisdom over 2 years ago now as a response to the COVID pandemic and helping our respective communities, property investors and business owners and investors in general find their way through the confusion that was happening at that point in time. We enjoyed it, and we've kept it going. And each week we're debriefing the week, and we do it with a bit of a rough structure, folks. What's in the news? Andy and I keep an eye on some articles and headlines to kind of debrief them on. Some of them are rubbish. Some of them are worth looking at. Yeah, most of them are rubbish. But, we find it important to debrief the week and bounce off each other. Our worlds are different but the same. Property and the world of shares really is Andy's neck of the woods, and property's mine. We kind of meet in the middle, not the biddle, meet in the middle with some similarities and opinions. But yeah. It's Fridays is the best, Alison. Yeah, we're happy with a Friday. I think it works, don't you, Andy?
Mate, that's it. It's only because neither of us have got social lives.
We got nothing else to do on a Friday night.
That's right.
And then a few of you guys are probably the same. So we're all peas in the pod here, which is awesome. 100%. But we like to sort of debrief the week. What's in the news? If you have any questions, whack them in the chat for us. Make sure you type them out. We're very happy to freestyle on any questions about the market, about shares, about property, about whatever. When it comes to our world, we're happy to give you a reasonably experienced, educated opinion. Anything outside of our scope, we'll give it a shot, but we can't be held accountable to any accuracy.
Yes, the big disclaimer. All of this could be true.
All of this could be true as you go. And then maybe if we get around to something a bit later on, if we have a bit of time, we might do something, what we say, things you should know, a bit of general knowledge about investing, some other things. So hang with us, folks. Usually about 50 minutes to 60 minutes long. Good chat, depending on how we get wound up and how many questions you guys ask us as well. So we're always happy to rock and roll and, keep it going in the mix. So what do you reckon, Andy? Did I miss anything?
No, I reckon you're pretty much spot on, mate. Yeah, maybe late, but on point. That's it.
Well, mate, I might chuck a few little cheeky ones over the fence to kick off the night.
Mate, throw a few hand grenades. Let's release some pins and get the night started.
Well, folks, a few things that are going on in the world of real estate, and I'll drill into these ones. I left this one up from last week, actually, which is, home value is likely to climb a little further before falling 15%. Again, you guys know that I think that's a bunch of rubbish. Absolute rubbish. But
I love the fact that the headline is actually hedging the bets.
Yeah, it's hedging it, right?
It's likely to climb further before it falls 15 to 20. I like the way that they put a 15 to 25% on the downside, but nothing on the upside.
Yeah. Well, it's funny, Andy. Never in Australian property history has the general property prices fallen anywhere near those two numbers. I'll show you a stat later on. The full market falls doesn't mean that somebody hasn't lost that much money on an individual property. But when we call it the market, it's actually a very misleading word, right? The market, Andy. There's markets within markets within markets within markets within markets and markets, and so on, folks. So these generalizations are very, very dangerous to take any heed in. But I thought it was quite funny, mate. You and I talk about this all the time. 1 minute they're going, it's going to fall, and then the next minute, over here, house lot sales, so the volume of sales to go down, which I've been talking about forever, but prices will rise. Literally, 1 minute apart. Articles, one going, it'll go down, and then the next minute, it'll go up. Make your mind up, you lot. I don't think.
I literally saw it in the Fin review. I've forgotten whether I was in app or where I was, but but it literally had the two polar opposite headlines, one underneath the other. But before I could take a screenshot with it on my phone, the article underneath disappeared. But it literally, one was going up, one was going down. It's amazing. But that's the media, isn't it? Appeal to the people. And I guess a lot of us, and half of the reason why we do this is a lot of us as people, and it's ingrained within our psychology. There's an incredible book by Robert Cialdini or Caldini or whatever. I don't want to butcher his name, but I probably
think it's Cialdini. I'm pretty sure.
Cialdini. Yeah. It would be the one that I didn't actually say.
I've had a butcher at that myself once or twice, Andy.
And so as human beings, and this is where a lot of us aren't great investors, because ultimately we look for confirmation bias. We look as to the reason why we're right. Few people can actually look for the reasons why they're wrong. And that's where a good analyst really comes from, is for people who are looking for where they're wrong so that they can get a balanced view of where they're going. So it makes sense that the media is going to give you the top when they have no idea, which let's be honest, is always. So always, as they've got no idea, they're going to hedge their bets. It's going to be one on the high side, one on the low side. So your filters based on your beliefs will ultimately dictate what you read. And that's a classic example, mate. Hilarious at the same time.
Absolutely. Well, something very interesting, Andy, right now. Folks, I don't know if you guys have heard this one going around. My 18-year-old son and his friends were schooling me on an internet sensation at the moment, something that's gone viral. Does anyone know at the moment there's a question?
Is this the reason why we've started later, Jason, so that we can actually go into this content?
which talks to your piece about this confirmation bias, Andy, which was actually a really interesting thing. So let me ask you this question. Maybe some of you guys online have heard this already. Okay. Which has more in the world? Either are there more wheels or are there more doors in the world? Andy, your answer.
Mate, I'm going to say there's more handles in the world than both of them.
The contrarian that is Andy Fenton.
Well, you got to get into both.
Politician. Maybe you could be a politician, Andy. You answered the question without answering the question.
I'm really looking for the true analysis there, Jace, because when you do the math, like you think, well, where are all the doors? They're in houses. How do you open the doors? With handles. Makes sense. And most of the wheels in the world are they're not on carts anymore. They're on cars. And yes, there's some motorbikes around there. And if you put Vietnam and China into there, then that might warp the statistics a little bit. So, mate, what would be more of?
Chuck it in the chat, folks, if you've heard this. I don't know if you guys have heard this. Maybe I only heard about it because of my younger kids, but this is an interesting experiment. Put it in the chat. Have a guess. Have a go. Tell us why, because Andy is already hedging his bets because he's actually but it's interesting, Andy, just really interesting to see your brain, how it works, because you are an analyst, right? So you didn't give an answer before you decided to understand, all right, how can I qualify my answer, right? And this is quite abnormal, folks. What you just saw right now is an abnormal response to a piece of information or a question in the world.
Been called that all my life, Whitten. Abnormal.
Not normal, Andy. Not normal.
I labelled it with special and then unique, with the kind of terms that I heard for it over time,
mate. But so what most folks would do would have a guess. Doors for sure. Then they would seek out confirmation for why their answer would be correct. Okay, and that, folks, is something that happens all the time, and that's what Andy was saying. Confirmation bias It's, you off the cuff without analysis. Oh, there you go. Chitra goes, there we go. Doors. He's taken doors and he's giving us some more, confirmation on, generally cars have got, 4 doors and 4 wheels, and maybe they've got 5 doors. Ajith, if the boot's a door, I don't know. And this is the thing, right?
That's why I went to handles, because immediately I went, doors. What happens if it's a slider? What happens if it's a hatch?
Totally. Yep. So then, we go looking for the confirmation for, I hear there's more iPhones now than humans. Well, I wouldn't, Alison, you know what? I've actually got 4 iPhones just for me. So, if I'm of any, and
he doesn't actually respond or text on any of them.
Well, yes, I think Michelle's right. We need to bust out a spreadsheet, Andy. That's for sure. And Chris is saying, well, what about the spare wheel? Well, there you go. There's 5 wheels and a steering wheel. Folks, this is the sort of thing, and it's actually a hilarious example of what we're talking about, where it is we jump to a conclusion, and this is a fun one. We jump to an answer, we jump to a conclusion, we jump to a position. And then what we do is we find random bits of information to block and build our position, which was, let's say, prematurely taken without research, data, or discussion. Right. So it's a really interesting one. And because the young fellas were asking, we went to lunch and they were asking the staff in the restaurant, and they were asking everyone, and like everyone was like having a guess right on the spot, right? And then they would immediately come up with like 5 reasons why their answer. Yep.
They get onto Google, they start Googling away like mad.
That's it. Yep. So for all of us, and I just thought it was fun and an interesting one, Andy, just to think about. That's how we often, as investors or potential investors or discussing investing, might position ourselves. We've got an opinion and we take a position, and then we try and find bits to back it up, rather than don't take an opinion, don't take a position, ask a question, and then find out a few things around it and see what comes of that information. So I thought that was pretty interesting, because if we fly back into, kind of a long way round of going, the reason I was sort of, talking about this is, this thing's okay, it's expected to fall, and it's expected to go up. Which way we traveling here, Andy? What is actually going on? And if we have a look in these 2 charts here, I'll see if I can zoom in on these. Let's have a look at this one. The monthly total listing for sales trends, right? Now, this is existing properties, Andy, existing properties. And have a look at that trajectory since 2010, all right? In the world of real estate right now, the trajectory has been just down nearly as low as you can go. And if you have a look back here from, 2009, the GFC, we had a little bump. But if you have a look at this, we had a really flat period for quite a while. And, the regional areas have trajected down for over a decade, maybe even 2 decades now, when it comes to the number of properties available in Australia to buy and sell. So listings, which is existing properties, have reduced to, folks, record lows. Over here, there was record lows. Look at that.
Record lows.
Jason, record lows. What do they say? Allegedly record lows, Andy. And it comes. So,
it's a new record, Jason. That's all that matters. It's a new record. It's a headline.
Record.
Headline.
But, if we have a look at other things as well, and I'm going to do a Wealth Coffee chat on this one next week, folks. I'll dive a little bit deeper specifically into this. But, have a look at the months available of residential stock. And this is to do with land stock coming through, Andy, available for people to purchase, and this is a month. So this is based on 1 month's worth of supply. But you have a look at Greater Sydney and Greater Melbourne, Greater Sydney, the
So
land supply.
just break that down a little bit more, Jace. So we're talking months of available residential stock. What does that mean?
So if you were to say, Andy's like saying, all right, I want to buy a piece of land in Melbourne, um, and I've decided today, and I want to get on with it, right? So technically, from a supply point of view, the clearance of that piece of real estate being available for sale on the shelf and then gone in Melbourne is 2 weeks, right?
Wow.
That's insane, right? You have a look in Greater Sydney and Southeast Queensland, um, that is 1 week or just 1 and a bit weeks, right?
Wow.
So everything that's up is out and sold, right?
That's Ken Bruce's going mad sort of stuff, isn't it?
It's insane. It's crazy. And anywhere, I mean, even Greater Perth, this is now we're talking, if you're talking up there, that's 12 weeks. That's not bad. 12 to 16 weeks of land supply. That keeps prices in
Nobody's allowed over there. Perth has got to be a little bit of an outlier at the moment because nobody new can go for an inspection. You wouldn't even buy in Perth via Zoom like they were doing up in Byron Bay, because you might be able to buy the real estate, but there's bugger all chance you're going to be able to get in there and live in it or use it.
Yeah, exactly. Yeah, you might. Yeah, it's a long way to go. Also, so in my world, you guys have heard me say this, and I feel like I'm a bit of a broken record of recent times. But I'll beat this drum until the cows come home, folks. The supply issue in Australia is hideous, and it's only going to get worse. And that's where we have a look at it, and we drill into these things. But it's interesting, Andy, and I'll leave this one as a little breadcrumb for you guys to join me on Wealth Coffee Chats on Monday, potentially, that the land prices haven't gone up. The average block price hasn't gone up as much as you would think because of this supply constraint, but something else has reduced. There we go. All right. Let's say the prices have only gone up 50 grand a block, Andy. Folks online, how is that the case when the demand is off the charts, but the price has only spiked on the cost of a piece of land? In some of these places, not more in others. But what has reduced to keep the price of an average block? What's reduced to keep the price lower? Tell me that one. What do you think, Andy? Think you might have an idea? The price hasn't gone up as far on the block average, but something else is reduced to keep it low.
The size, I would have thought. It's not about size, Jace, but
Mate, well, it is this time, Andy. You're a genius.
It's how you use the block, I hear.
Well, yes. Yep. And it's no use having a big block if you don't know what to do with it, right?
Well, they call it highest and best use, don't they?
That highest and best use. Alison, you're right. It's the size of the block of land. Absolutely right. So what has happened, folks, is they have reduced the average block of land from 450 to 400 to 350 to 300 to 290. That has kept the average block price of a piece of land, Andy, the house price, averaging. But what's not being taken into account, folks, is that the block size has been reducing. So when you talk about the cost per square meter, 450 is the new 650. And Alison, right now, 350 is the new 450. Yep. Yeah. Yep, absolutely. And then, Chris, the cost of construction's gone up, right? So what's happening, Andy, underneath, folks, you guys who've been around a little while, you see this happening. There's a strange little mechanism going on where it feels like the price is the same, but you're getting less. The size of the drink bottles gone down.
It's the red spot special all over again. Unbelievable.
Yeah. So there you go. That's what's happening under our feet. And if you were to go buy a 450 block, like Alison said, 450, square meters used to be the bomb. Well, that one is 150 grand more, Andy. And away you go. Yep.
This is what we were talking a lot about taking one, turning it into two, taking 1.5, turning it into 3 or 4.
Yeah.
Which by means that there's going to be more doors than there are wheels. But
and he's a door guy. Yep. And Michelle, Michelle was in the retail trade for a long time, and that's what happens to the major retailers when they want more money. They reduce the size of the produce, and then package it differently. So that's what's happening, folks, right there under our nose when it comes to the real estate game, and a few things. That's what's in the news right now, folks. If that's out and about, but I did say, Andy, I would show this just quickly, and have a look at these times and moments. This is the swings. This is the swings in the house price growth year-end change of the median house price since 1990 or something like that, right? So we've had some peaks, and this is about a year behind now. But if you look at it, check out this, right? So we have a look in, in here. Anyone remember what this one is here? Anyone know what that one was? That was. You there still, Andy?
I'm still here, mate.
Oh, I think you've done something weird with your camera, or is that me?
No. I've found a slide that perfectly overlays yours. So
perfect. All right, we'll switch out in a second then. So folks, the GFC, the worst financial crisis the world's ever seen. Boom, collapse. 5% adjustment a year end on house price growth. Right. We had 2 little dips of that from the GFC, a little bit of GFC shock. The biggest one we've seen has had nothing to do with COVID. And anyone know what that is? Chuck that one in the chat for me. What was the biggest reduction in house prices we've ever seen in recent times since 1990? The year-end change of the average or the median house price.
And just as a little bit of a hint, it doesn't rhyme with wanker, but it does have something to do with them. But it does rhyme with politician, with magician.
Magician. Yeah. Again, that was the political messing around with the supply of finance, folks. At the APRA finance squeeze, boom, James nailed it.
James on
it. James gets the sticker. We need a little, Andy, give him a cheer, mate. Good work, James. Yeah. The industry changing the rules for investors. Absolutely, Rosalind. And that's what happened. But let's have a look at Andy's little chart here. What do we got, mate?
Why does it have to be a little chart? Come on.
Hey, it's big now.
Well, mate, it's we should overlay these, and maybe next week we will. We'll get them, and we'll put a translucent copy over the top of it, because ultimately, the GFC was over here, right? And so this is the cash rate, target effectively, and in Australia, and obviously you can see right now it's down as low as it can go. It's a true red spot special. It doesn't actually get any lower than this. Well, it could if it went negative, but we all understand that doesn't really work. But if you add this as a correlation over your previous chart, like there's very, very definite trends. And one of the biggest impactors, or one of the big things that impacts more on property than anything else, from what I see in the commercial world, but it's got to flow through, is the availability of credit. It doesn't actually, the cost of credit almost doesn't matter, because you can go through times of hyperinflation like you have in Brazil, where everything's going up at 1,000,000 miles a second, and you can still get massive house growth. You can still get high interest rates, but it's worth it. The game is
that's so true, Andy, because the GFC, those interest rates, post GFC were 7s, 8s, 9s, but the availability of that credit still in Australia was easy, right? There was easy credit still.
Well, outside of the commercial space, commercial really, really dried up as a result of over leveraged positions, property syndication in Australia. but the availability of credit, and that's where you see this rapid decline in interest rates with a rapid increase in the availability of credit. You actually saw, if we go back to your chart, Jace, we saw this massive spike, which was synthetically created by policy, effectively.
Yeah.
And that massive spike. So you can see it right there, where the far left of the screen.
Yeah.
Housing price growth just went freaking absolutely bananas, and then obviously came back down. And so availability of credit went through the roof. And I'm not sure whether that was pre or post GFC, but availability of credit would have been one of the strongest, along with inflation. So if it was before and inflation's running hot, then as long as you've got credit growth, you're going to have asset growth. That's pretty much bar none, right?
Yeah.
So everyone always says interest rates go up, property prices go down. It's bullshit. It's not necessarily a straight correlation. People always say interest rates go up, share markets go down. It's bullshit. And I've actually got one which I'll just show. And I think we went through this last week, but it probably deserves another quick mention because we talk about it a lot.
Yeah.
If we have a look at, and this is US statistics again, team, because it's a bigger target sample, and it's less affected by noise. We're 2% of the GDP, and US is like 48 to 53 or whatever, depending on which year it is. But when we look at starting interest rates to ending interest rates over these time periods, over the left-hand side here, all of these periods of time represent reasonably large interest rate increases.
Rises. Yeah, totally. Yep.
But when we actually have a look at the S&P, which is the market return over those same periods of time, Jesus, interest rates went from 5.5% to 20%, and there was 68% growth in the equities market. So there could be a lag effect, because you could go, and I haven't done the additional analysis, but you go 1981 to 90 as an example. Well, I know that over that period of time, we actually had very strong markets anyway, so it kept on going up. So this perceived correlation of this door and wheel argument that people have, is not necessarily statistically true.
Accurate. Yeah. Well, yeah, exactly. And, the idea, mate, is that, for all of us as investors, you always say this one, history, is a good example, but not necessarily repeating itself, right? I don't even know what I remember what you say, but
I reckon I've said that around about maybe 100 times on this show, and I just love the fact that you can never get it right. History doesn't, ladies and gentlemen, let's see if you can get this in the chat.
You say something about fucking history. History's a good mimic or something, but it's not fucking, shit.
We'll see if anybody gets it in there. There's a definite gold star for this, but history doesn't repeat itself, but it's an incredible mimic.
I knew there was mimic in there somewhere, Fenton.
Definitely a mimic. and look, we're seeing that right now, and I'm not quite sure what you're about to go to here, but we're certainly seeing it right now, because we're in a potential wartime. Well, we are in a wartime. We're certainly in a high level conflict time. First time in a very, very long time since people have talked about nuclear weapons. I got some interesting statistics in and around that. And so good wine then, Jason. That's right, Alison. But I guess goes back to, if we're looking for confirmation that markets are going to go down, you'll find it.
Yeah.
If you're looking for confirmation that markets are going to go up, you'll find it. But the reality is that these, what are they called? Something maximums. I forgot. Now I've got your problem, Joe.
Yeah, forget it. No, you're on the wine too, mate. There you go. We're having these moments, these old man moments.
What's my name? Where am I?
Who am I again? These data points in there.
So what are we looking at here, Jace?
Well, I mean, last week you showed something very similar to this, Andy, when it came to, all right, well, over time, what was going on and what happened, especially in relation to, what's going on right now, wars, et cetera, et cetera. And I found this one, which I thought was quite interesting as well. It'd be interesting to overlay any of those other things from 1970 when it came to, if there was anything going on, and conflicts and stuff from that point onwards. But the property prices have tended to traject in a fairly consistent trajectory. From around the 1990 recession, the cash rates and interest rates have gone down pretty well. But prior to that, interest rates, cash rates, we were still trajectorying pretty nicely anyway. We've now, entered, or we're going to be in a low interest rate environment for a long, long time. I think probably forever, Andy. My call would be under 5%, for a long, long time, for decades and decades to come. We got a question about, interest rates there from someone. We might sort of circle around to answer that one in a minute. But, in reality, GFC, COVID, these major things in the real estate market, small little small little pause. You can see small little pauses in the property trajectory, but in reality, didn't hold it back, didn't stop it. Interest rates went up here, and this. If we zoom in on this one, Andy, interest rates went up in this section 2010 onwards, and the property market took off. So interest rates went down, to soften the blow of the GFC. Then they bopped them back up real quick, and but the property market was still traveling because
Let's go up there, Jason, have a look how aggressively it did over that period of time. So you can see there, just where that circle is there. Yeah.
Yep.
You can see the little W that happened there,
Yep.
which, because there's obviously a lagging effect. And if you think of how long it takes you to buy property, 30, 60, 90 days just in, achieving the finance.
Yeah.
Be interested to know, what do you guys think actually happened over that period of time that led to, look at that, as a very steep increase in property prices while there were rising interest rates? What do you think? What do you think happened there? Be really interested for you guys.
There's some interesting ones, but what happened in Brisbane? There was a flood, and then there was an oversupply in Brisbane. And it's actually not a bad thing to have an oversupply in markets, Andy. Because what happens is you can buy position, and this is where Sam and I were talking about this stuff. You could buy 1 kilometer from the CBD of Brisbane in 2014, 2015, when we had quite a lot of supply, for just an absolute cracking price. Like, fantastic. Now go and try and buy that same thing for $600,000-$700,000 back then, maybe even cheaper. It was, $450,000 to $550,000. Now is $1.2 million, $1.5 million, right? So supply allows you to buy higher quality things in better locations when the market is supplied sufficiently, or even a bit oversupplied. And don't be afraid of oversupply if you are a serious investor. It actually gives you some very good buying terms as a purchaser. So, in Australia right now, Melbourne has actually got a little bit more supply than Brisbane and Sydney, like our primary markets where we're shopping. So Melbourne is a little bit more competitive when it comes to the price per square meter and the price per position for an investment at the moment than Sydney or Brisbane is at the moment, right? So Adelaide and Perth, you guys saw those stats before, not flying out to those locations just yet for investment, because I think there's great buying in those other 3 locations. But there you go, Andy. So that was my stuff, mate. I've got a few other little ones here that I thought you and I could wax lyrical on. I know you've got a couple, but one thing that has entertained me in the news of recent times, which I think is pretty interesting. So I saw this article today: 2 major tectonic shifts will last for decades, folks, into the future, which will affect the equities market, Andy. No end. You and I have talked about this, right? Folks, tell me what you guys think it might be. 2 major tectonic shifts, or things that the equities market will need to understand price in, hedge against, blah, 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 whatever those things might be. Andy might be able to sort of take the conversation a little bit further, but tell us in the chat, team, what do you guys think it might be? What things? It says here, 2 big shocks sparked by the war in the Ukraine will shape the financial markets and the commodity markets and the global economy for decades to come. But equity investors seem sanguine. Oh, what the hell is sanguine, Andy? Anyway, I don't know. I don't know what that means.
It's a winery up in the north of Victoria, I think.
Yes, it is. Well, Rosalind, I think, has started the foray of the answer, which oil, yes, oil. But what does it mean? Oil, but also a few other things. Rosalind, good work. We want to give Rosalind a cheer, Andy. You've got the sounds. Go, Rosalind. So the idea, we've got a few little spammers dropping by, folks. I'll just block them as we go, and Andy can continue the chat. But listen, Rosalind said oil, but it is known as a bit of an energy crisis, Andy.
Right, and that's what we're looking at the moment. That's what's probably, in my views, having some of the more substantial effects on markets at the moment, and probably causing a little bit more of the turbulence. It's less about the war. If you ask most market commentators at the moment, they're basically saying that like what happened with COVID, the market sort of started pricing it in really quite early. And then the emotion drove it down, created a huge amount of volatility. But there was pre-pricing of COVID into the markets, and there's certainly pre-pricing of this conflict in markets. Now, that doesn't necessarily translate directly into commodity prices, because that is largely then driven by political decisions to create trade embargoes. And it's been a while since we used this, because we talked about this almost 2 years ago, in that the standard way things happen, and look, hopefully it never eventuates, but the standard way these geopolitical events tend to work through is that they have currency wars, right, where they manipulate their currencies in order to gain a competitive advantage on whatever it is that they're vying for over that period of time. And then we go to trade wars, and trade wars are what you're seeing literally right now, with embargoes, with tariffs, with limited supply, and that those wars actually have more of an impact on global markets than the war itself. I hate to say it, but more often than not, war is actually a good thing for markets. It's not a good thing, and I don't endorse it, and I don't celebrate it by any stretch of the imagination. But what wars can do, and have done in the past, have actually driven construction, driven markets up, because there's obviously a number of things that need to be produced in order to be able to go to war. So a lot of people make money out of wars. People wouldn't have wars unless they made money out of them. But it's all of the tariffs, it's all the trade embargoes, it's things like that which really have a larger impact. And that's what we're going to see. And the effects of this can be a lot longer standing. Like, if we have a look at, again, we covered this about a year and a half ago. We were talking about fracture, shale oil, and the American relationship with the Saudis. I've been reading some interesting stuff right about now, because they're looking to reunite some ties, but good old Trump gave a fair few draw blows to the Saudis throughout his period of time in politics. So Biden's eating some humble pie right about now, trying to negotiate some reasonable terms and supplies, because ultimately that kicks on and I've got something here which I can share with you. The oil prices actually are very, very closely related to the cost of food. And we talked about this last week from a slightly different perspective. But you'll notice here there's a few things that tend to pick up when oil prices really start to spike, right? Now, you can see here, crude, obviously, on a rocket ship right about now. But look how quickly it priced into the food market over here. So we're talking about wheat, and we're talking about the food index. Large Australian food index over in the US. So obviously spiking really aggressively. I haven't got an update on this, but they're going to keep going north. And they're going north because the combine harvesters are still powered by oil. You know, the shipping or the transport of these, you don't have as many Tesla trucks on the road, or you don't have enough of the Tesla trucks on the road just yet in order to be able to fuel them these ways. But what we can see is, so this kind of trade war that's happening, and we saw very, very similar things with Kuwait and Iraq, albeit these, because of the velocity of money back then, it had a longer term effect, right? It happened slower. The volatility wasn't quite as big, but the velocity of information and the velocity of money wasn't as fast as what it is now.
That would be interesting to see, right? Because, we've talked about that. You've talked about it a lot, about the velocity of how fast money and stuff can travel around, and information. That'd be very interesting to see how that plays out.
So when we talk about energy, we're absolutely, look, this is something that's going to play out for a little while, because the parts that you can't correct quickly are the relationships, because obviously there's political positions that people are going to be taking as these things come through. Politicians are looking for their own confirmation bias. They're looking for their own doors and their own wheels, and trying to substantiate their cases as to why they're right in it. So these things can take time to kind of wash through, but then they can revert very, very quickly. Once you start to remobilize, there's an inertia that happens, especially in oil. When you start really doubling down on production, that might be 3-6 months. Then all of a sudden that hits the market. And the same thing as what you were saying previously about property. Then all of a sudden you have a flood on the market, and you end up with the exact opposite. Energy prices will plummet potentially, in the future, should that happen.
There you go. Well, Rosalind did some research. Thank you, Rosalind. Sanguine, optimistic or positive, especially in apparently bad or difficult situations. He's sanguine about the prospects of the global economy. Well, there you go. That's learned something today. So thank you, Rosalind. Appreciate you taking the time to do the research on that one. But reading that article, Andy, part of that was, certainly talking about all of those, influences when it comes to, oil and other bits and pieces. One of the things in there was the idea that energy security for countries is like high on the agenda, right? But my brain, like yours, we think a little bit outside the box sometimes, and energy security, a lot of Europe is relying on Russia for, oil and gas, right? They pipelines, across, hundreds of thousands of kilometers or thousands of kilometers. And now they're having an argument. So Russia can say, yeah, no more gas, you lot, and no one can cook, no one can do whatever. Energy security into the future. And it's interesting, and probably not a coincidence. You see people like Twiggy Forrest here, Andrew Forrest, talking about, some of the new future energy systems that people are investing in. A billionaire like Forrest saying, hey, he's going to get behind green hydrogen as, a solution, like the Elon Musks of the world getting behind, batteries and solar. Like Mike Cannon-Brookes, folks. I don't know if you guys have heard Mike Cannon-Brookes, founder of Atlassian, one of Australia's most successful companies, exports ever in Australia's history. Just made a bid on AGL, tried to buy, a part of AGL, Australian Gas and something or other. I think I can't remember what it's called, actually, AGL. He said if he could buy the company, he would shut down the 9 coal plants, Andy. All right. So, what are your thoughts in that space, mate? We've got privateers. We know the future. Let's say, oil now is up, petrol, it goes to $3, $5. All of these technologies now, Andy, become actually competitive
Yeah.
in the marketplace. What do you think? This is the old, not financial advice, but crystal ball gazing in this
No, well,
space.
let's just talk about stats.
Yeah.
Right? Let's not go to advice, but I think Jace, you and I do share a brain, mate, because our slide preparation was not rehearsed. But what we're looking at here is billions of dollars by half year.
Roslyn, our producer. Thank you, Roslyn. You are now our official producer. Roslyn has done. She has helped us with Australian Gas Lighting Company. There you go, AGL.
Yeah,
Yeah,
Australia.
there you
Oh my! I didn't realise they were the gaslighters of Australia. Jeepers creepers. No, so they work with the politicians. I always thought they were in an energy company. Well, apparently they're into gaslighting. They should be on maths. So what we're looking at here, right, and I just thought this was interesting. I'm doing a lot in this space. I've been doing a lot in this space now for about 2 years. Just anything responsible, anything ethical. What I've realized is that responsible and ethical to everybody have completely different definitions. And we may actually bring on one of our UK friends to talk about this. They've got one of the most advanced ESG screening tools in the world at the moment, and super brains, incredible business, love them to death. But so what we're looking at here is actually the per half year, the billions of dollars that are spent in renewable energy. So we've got wind and blue.
Invested in those businesses, like sort of invested. Yep.
Yep. So we're going back to 2004 on the chart on the left hand side.
Wow.
And this is from Bloomberg. So look at that sort of growth that we're seeing. So wind has had a massive growth.
Huge.
Solar, obviously huge. Believe it or not, though, you look at these statistics in Australia, Jason, you would be shocked. We are shit. We are behind the world so far. It's
so embarrassing.
It's embarrassing.
Yeah.
It really is embarrassing. And this is where affluence breeds dickheads.
Yeah.
And make no mistake, strength isn't built from good times. It's not. Strength is built from bruises, from shit, from learning the lessons of struggle. And the same thing politically and economically, I'm now really starting to believe. And this entitlement kind of philosophy that people have, or this entitlement, maybe I'll just stop on that. No, wait, I'll keep going. The entitlement philosophy that voters have in regards to who they elect as well, the same thing. So now it's a popularity race in regards to politics. But anyway, I'll get off my soapbox rather. But clearly what we're seeing here is a massive drive. So wind and solar, are they the most efficient? Well, no, they were just only 20 years ago the only things that we could start to invest money in and have a crack at being able to really make sustainable. But now biofuels, biomass and waste, geothermal, small hydro, marine, this side of the equation is really starting to show some good upside. The problem is there's just no capital in there at the moment. So if we extrapolate this growth trajectory, and we're talking, 160, so we're talking 300, almost 400 billion a year, because this is half yearly, these stats here. So 400, close to 400 billion a year is being spent and will be very, very soon. These will start to take over, and you're 100% right. One of the great opportunities I think that'll come from this conflict is everybody looking at how can we, based on where we live, produce more sustainable, long-term profitable ways of producing energy.
Well, you think about it, Andy. You think about it right now, right? So yeah, and which is great. Like, I love these conversations because you go, all right, well, let's say I'm New Zealand, right? And hello to our brothers and sisters across the ditch.
I love the New Zealanders.
They're a good crew, right? And it's just it's just a close example, right? So I'm New Zealand. Yep. I don't want to be buying coal or uranium or any other resource that I don't have in my own country. Like, why, how can I be energy independent? Now, if you think about that, folks, right now, what are the three big things, Andy, right? You go, what are they? They're food, they're water, and energy independence, right? They're kind of like the baselines. Can you get a pair of jeans from, you know, from another country cheaper than you could build them in, like make them in New Zealand? Yes, but at the end of the day, the zombie apocalypse arrives. You make your bloody jeans in New Zealand, right? If you had to. But you know, uh, New Zealand is a country that's actually leading the way with being very, very independent energy wise. So, think about that sort of stuff, and some of these, the supply chain issues that we've seen over COVID, now potentially the energy issues that maybe places like Europe are going to feel more than, us in Australia or America, um, shaping the future. And also, for me, what I think is exciting is that, renewable energy uh, can be more cost effective, could be more cost effective. And I'm really trying to get my head around at this moment in time going, okay, well, if petrol prices go up to $2 or $3, does that make it more tangible for them to try and drill more holes in the ground and pull out more oil? Or, is it that electricity is now cheaper from wind or solar
It's
or these
both.
other projects? It's a bit of
It's
both,
both.
right? Yeah.
It's both.
Yeah.
They're not mutually exclusive to each other. They work with each other.
Yeah.
Oil will never be dead. Petrol, will never be dead. It will just have a purpose use. Uh,
Yes.
and whether that then becomes an almost insignificant amount of purpose use, then
Yep.
maybe that's where it ends up. But these all the natural equilibrium of things will be that they will all find their highest and best use, and that's what this is all about.
Yeah.
And
Yeah.
you talk about New Zealand, you think about the geothermal projects that are happening over there at the moment, being able to harness the use of a thermal activity
Yeah.
which is a part of the countryside, and being able to use that to support the energy production of the whole country. Like there's some amazing things that are going over there, but at the moment, the amount of money being spent in other areas other than your solar and your wind are quite insignificant.
Yeah.
And
Crazy, huh?
we
That's a crazy chart. That's awesome.
and we will see that dynamic change quite significantly, especially now because there's a political agenda that can be utilized by different companies out there,
Yeah.
and again, it's not the only source of being able to provide energy security. Like in Australia, we can start to dig the stuff up. We can start to repipe the gases and all of those sorts of things. But I think that the world is now starting to go in a different direction. And one of the reasons why Twiggy's doing what he's doing now, a lot of people haven't known this, but we do ESG screening on stocks for our portfolios. We do it for all of our investments. It's almost impossible now. Well, not impossible. It is unusual to find gambling stocks in portfolios, right? Because most people are now going, no, we don't want it. We want ethical. Just by the by, make an extraordinary amount of money on the gambling stocks, but inconsequential to this commentary. But so what we're seeing now is a lot of people want to go into the socially responsible. A lot of people want to go into the ethical investment side of the equation. So
Yeah.
as more
Yeah.
money naturally goes into that area, we're going to
Yeah.
see obviously more investment. It'll get more mature, and with Fortescue, with Twiggy and the guys, they have been banging this drum now for about 5 years of making the transition, because they're now talking about having a company that used to be the big bad dog on the street and transforming what they do, because now they have the size, they have the capability. So if you
Yeah.
have one of the biggest suppliers that was the bad boy on the block as far as ESG is concerned, well, Zebra can change its stripes. And that's exactly what he's talking about doing. He's talking about repositioning the company now for future sustainability
For
of
another
Australia.
200 years. Yeah. The next
100%.
200 years. It's interesting, isn't it? What's one of the biggest investment funds in the world. Is it BlackRock or Magellan? I can't remember who it is.
There's a number of them. There's Russell, there's BlackRock, there's Magellan's a big international one that's been in the news a lot, but not one of the biggest by a country mile.
Which one divested itself? And it was 18 or 19. It said, "Hey, listen, we're out of coal, we're out of oil, like we're out."
Oh,
like,
many.
Yeah,
Many.
yeah, because they've basically said, "Hey, listen, it's a 200-year play here. It's not a 20-year play, and we're out." And it was interesting to observe the conversation where a few of the media were saying, "Oh, that's wonderful. You're choosing, a better future for the planet." And basically, the guy said, and I'm laughing out of like embarrassment, almost like this. What the? He said, "I don't give a shit about the planet and its future. It's got to do with investing." And I'm like, holy shit, like that's hardcore. It's like
that's brilliant. Yeah. I love it. I absolutely love it. Call it how you see it. I'll go anywhere we make money. We've got a few satellite funds that are in prostitution and gambling and pharmaceuticals as well.
Yeah, exactly. Well, Alison was talking about, I think it was this one here. Big movement to ensure that super funds were invested ethically, which is great. I love that. Rosalind chucked this one up as well. It shows real-time use of, solar power. And the thing is, which I love, I'm a big fan of a bunch of YouTube channels about, renewable energies, all sorts of things. Like it's not one of them. It's a combination of them that's actually going to help us, get shit on track, and do a bit of a better future, which is awesome. We've been, one of the things that we've been doing, Andy, and plenty of the team online know that we've been making sure that all of our properties are 6-star rating and above when it comes to energy efficiency. And if they aren't, sometimes they're like 5.5 or whatever. We're buying and planting trees to offset the carbon. So, if everyone does their job, or a little bit, but it's kind of trendy, it's kind of niche, it's kind of in, right? And what does that mean to us as investors? Not only do we feel good about what our money's doing, but we can get a return, Andy, and we can be part of some companies and some growth and some assets and returns for the future, which I think's smart to keep an eye on.
Well, this is where the interesting conversation starts, and maybe it's something that we'll jump into in future weeks. It's something that I'm not going to say I'm an expert on any stretch of the imagination, but something I've certainly been studying for a while. I know Facebook. You look at these large companies wanting to bring Facebook is because ostensibly, what is Facebook? It's a user's platform. Like, what is the value of Facebook? Like, tangibly, it's not property, it's not oil, it's not any of these things. It's an intangible, which they're now in the metaverse and all that sort of jazz. But what my point is that these things started to drive. They attracted a lot of money, they attracted a lot of venture capital, and they attracted the imagination and the audience of a world of billions of people, and they went north very, very, very quickly. My tip and is to watch the socially responsible, the ESG, the RSI, the renewable
ESG. What's the acronym?
Oh, mate, I forget. Environmental, sustainable, green. RSI, responsible, sustainable investing. There's so many different acronyms that are coming out for this stuff now. And everyone's interpretation is different. What you think is socially responsible may not even start to articulate it for me. And that's going to be one of the big challenges moving forward. But one of the great opportunities is that everyone's looking into that space now. And so what that does is Facebook had a ridiculous amount of capital that was invested in the company before it even turned over $1 of revenue. And so this kind of movement has the potential that very similar things can happen, in that we can shift in different directions and we can have very, very large amounts of the global resources go into companies that are producing these types of technologies. And now it's trendy to do so.
Yeah. It's in vogue, right? It's it's the thing. Well, it's an interesting one, right? What did they say? Was it the 80s or 90s? Greed was good was some catch cry. And now sort of sustainable or renewable or green is good. I think I prefer the latter rather than the prior. But
Green is good, but it's been 20 years in the making to get to here, and we're just
yeah,
starting to get to the level. Like
yeah.
we're still probably we need to double the amount of expenditure into these areas before they're really going to have the resources to be able
Completely agree.
to
Yeah,
take it next level.
yeah.
But it's trending in that direction, and all of the research that I'm doing at the moment is that these types of ethical investments are actually performing really, really well, and sometimes
Really well.
outperforming the major indexes. And
Well, Andy, what we do know, I mean, we could probably bring some of these stats maybe for next week or the week after. The largest transition of wealth the world has ever seen is underway, folks. From the baby boomers to the ones coming after. The next 10 to 20 years, the wealth will transfer from the baby boomers to those who are next. There we go. Let's do that. Yep, it's on its way, Andy. And I think for all of us, that's something to keep an eye on. Potentially, it can't come soon enough, and maybe the next generation will start to uh, because it's in vogue, because it's potentially the right thing to do, because that's the way they want to roll it. This world of green, responsible, you know, uh, add value to the planet investing is going to be the next big boom. Now that's my call, allegedly. Anyway, that's what I think. Those industries are going to go off their chops.
well,
Off
it
their
takes a
chops.
value shift quite often in markets
Yeah,
politically in order to really change the trajectory of the world. And we are seeing, the Ys and the X. We're just the in betweenies that don't
yeah.
really fit anywhere. We don't have any
What happened to
ideas
the
of our
candy?
own. We don't. We didn't create the tech. Well, we created the tech era, I guess. But we're the in betweenies, and as we filter through, because let's face it, we're here, Chase.
Mm,
We're in this range right here, the range that
yeah,
nobody really gives a stuff about. Um, but the transition of wealth will majority be down here. And
yeah,
that's where there's different values. There's
yeah.
different ideas as to where the world's going to go. There's different ways that they communicate. There's different platforms that they use to communicate with. And ultimately, there is a very, very different way. And you know it with your kids, right? They look at the world from a very, very different perspective.
Different kettle of fish. Yep.
And they don't listen to us. Like,
Little buggers.
I think at some point in time we used to listen to our parents and kind of take what they had as sort of that's the direction. But there's
I
a
think
lot.
that I think that was propaganda, Andy. I think that's propaganda. I don't think that's ever happened in the history of the world. But folks, why don't we put a dot in that one, Andy, and leave that for another day, because I think that'd be a great conversation to have at some point in the future. And folks, let us know if there's a subject you might think it might be fun to cover. Uh, Coming soon, Andy and I are thinking about busting open on the Friday show. A little bit of some theming. We wanted to do some stuff around business owners. We wanted to do some stuff around investments. Different other bits and pieces. Maybe getting some guests on. So keep an eye out, folks. We're going to sort of design maybe the next 6 to 12 months of Wealth, Wine, and Wisdoms, and do something a little bit themed in and around that. But if you've got an idea, give us a shout out. Let us know. Always happy to do what we need to do when it comes to answering the questions of everyone in the world of the community. So I had to block a couple of YouTube. What happened there?
Mate, I'm watching that. We're getting smashed in the background of we're getting spammed out of control in the background here. It's
There's a few
incredible.
spammers on tonight. Don't know what that is, folks, but just ignore it. So there we go, Andy. Folks, done and dusted. Wealth, Wine and Wisdom. Fenton, good to hang out with you, mate.
Good
Folks,
to see you, mate.
Great to hang out with you guys as well. Thank you for hanging out today, Chris, Alison, Rosalind, our now unofficial but official producer and researcher, and the rest of you guys. Fantastic to have you guys today, hanging out, doing what we need to do on a Friday afternoon, having a bit of fun potentially. Hopefully, for those who've been here the whole hour, hopefully it was useful. So I think that's it. We'll call it done and dusted, Fenton. We'll try and be on time next week, folks. I'll let Andy organise the calendar, not me.
Have a great weekend, ladies and gents. And it's good night from me.
And it's good night from him. Good night.
Good night.